AbbVie just surprised investors by slashing its 2025 profit outlook weeks before its Q1 earnings call. With several major acquisitions and unexpected costs on the table, this move raises serious questions. What's behind this forecast cut? And what should investors watch ahead of April 25th? Let's take a closer look. For years, AbbVie has been viewed as a rock-solid pharmaceutical giant, boosted by blockbuster drugs like Humira and a strong dividend history. But in early April 2025, the company did something unexpected. It revised its financial outlook downward. For many investors, this marked a turning point in how they viewed the stock. AbbVie adjusted both its first quarter and full-year earnings expectations. EPS for Q1 2025 was lowered to between $2.34 and $2.38, down from $2.51. Full-year guidance followed suit, now ranging from $11.99 to $12.19. The key reason? Significant acquisition-related costs hitting their short-term profitability. So what caused this drop in guidance? AbbVie cited more than $248 million in costs tied to recent acquisitions, primarily milestone payments and research expenses. While these costs weigh on 2025 profits, the company frames them as part of a broader long-term growth strategy. In 2024, AbbVie went on a shopping spree, spending over $20 billion on strategic acquisitions. Cerevel Therapeutics boosted its neuroscience pipeline. ImmunoGen brought cutting-edge oncology therapies. And Aliada deepened AbbVie's investment in Alzheimer's research. These deals are costly upfront but key to future growth. With Humira facing biosimilar competition, AbbVie is redefining its future. The focus now lies on high-risk, high-reward areas like neuroscience, oncology, and Alzheimer's. Instead of waiting for organic breakthroughs, the company is buying growth, investing heavily now to capture future revenue streams. The market didn't take the news lightly. AbbVie shares fell nearly 8%, dropping from around $201 to just under $187 following the outlook revision. Investors are concerned about near-term profitability and whether the company can successfully integrate its new acquisitions. Investors aren't just reacting to the numbers, they're worried about the bigger picture. AbbVie's margins are under pressure due to high acquisition costs, and the timeline for realizing value from these deals remains unclear. Add integration risks, and it's easy to see why some investors are uneasy. All eyes now turn to April 25th, when AbbVie will report its Q1 2025 results before the market opens. Investors will look for clarity on acquisition integration, expense breakdowns, and, most importantly, whether the company reaffirms or further adjusts its full-year guidance. Wall Street is split. Some analysts view AbbVie's dip as a buying opportunity, especially given its pipeline potential. Others are more cautious, highlighting short-term margin pressure and integration risks. Either way, all eyes are on how the company performs over the next few quarters. After the sell-off, AbbVie's valuation looks more attractive, trading at a forward PE of around 15 with a dividend yield above 3.5%. But whether the stock is truly undervalued depends on one big unknown: the success of its recent acquisitions and pipeline execution. When AbbVie reports on April 25th, keep an eye on a few critical signals: how the company is integrating its new acquisitions, how it classifies recent expenses, and whether it sticks to or adjusts its full-year guidance. These will shape the narrative going forward. Beneath the short-term noise lies long-term promise. AbbVie is expanding into high-demand therapeutic areas, with a rich pipeline of late-stage assets. If even a few of its development programs succeed, the payoff could be significant in the years ahead. AbbVie has taken a bold path, and with that comes risk. Investors should brace for the possibility of further guidance changes, and the company still faces the complex task of integrating multiple acquisitions while delivering timely pipeline results. Surprises may not be over yet. AbbVie's bold strategy is shaking up investor expectations. With short-term profitability under pressure and long-term gains uncertain, the April 25th earnings call could be pivotal. Is this a smart repositioning or a risky gamble? That's the question every investor must now answer.